Good morning and welcome to this new video from TradeUI. We're going to break down option flow and how you can use that to give yourself a trading edge. So, option flow comes in throughout the trading day consistently from the market open to the market close. What that is large option contracts being bought and sold throughout the trading day. Us as traders can read this flow to determine what big whale traders are making in the market, and we can follow those moves to make our own assessment on stocks to determine if we think we're bullish or bearish. So how can we really utilize this to its maximum capacity? Multiple different ways. Setup one is you can actually look for the big blue chip stocks and see where those hard heavy transactions are coming. If you want to do that, you can always go to market cap and look for mega cap. If you want to see people buying either puts or calls, you'll just do ask. And then if you want to see a certain premium coming through, basically how much money are they spending, you can set that minimum default. Alright, so we're going to set this one for 100,000. We're going to look for people buying mega cap stocks. So we see Apple, Amazon, LLY, CSCO, all those stocks have had big call options that are bullish that are valued over $100,000 in premium. If you go down here, it'll show you the list of all the actual option activity that happened, and it'll show you the strike they bought, the correlating price when they bought that strike, and how many days till expiration. So in this case right here, we actually have what we call a bearish call on NVIDIA because our AI determined that the data from this option contract is bearish, because it's an out-the-money call that wasn't bought at the fill, it was bought kind of in between, so somebody kind of got it at a little deal. But if we want to look at CSCO, we can see that this contract was an out-the-money strike. In the next 3 months, they're expecting it to go up 4% because they're betting $110,000 that CSCO is going to run to 55 within the next 3 months. So, that is a quick little viewpoint of how you can see where the big money is coming in on the safe, secure stocks. But now, let's see what we can do to find the smart money. So what's the difference between safe money and smart money? Safe money is buying the big blue chip stocks, seeing large transaction orders going through, 1 to 2% moves, right. In the long run, 1 to 2% moves are pretty nice over time, especially compounded. However, we have a system here that we can utilize to find 5, 10, 12% moves. So what we're going to do is we're actually going to look at the medium and small cap stocks. So I'm going to select medium right here, and I'm going to keep the same settings. Look for people buying, and I'm going to look for a minimum premium of $100,000. So whenever I apply these filters, it takes a second because it's a lot of data shifting. It'll show different tickers right here that have the associated criteria. And as you can see, we already have one right here, PBF, an expected 5% move the next 3 months. Over $500,000 worth of PBF was bought, targeting $45. You have a lot more in-the-money calls going on here. However, something you can look at is if you reduce your minimum premium to say $30,000, you'll probably see more contracts because it's a little less money and then it's a little less risk on their side. However, they see smart moves to the upside. So we'll do our minimum premium of $30,000, and we'll even set our out-the-money calls, and we'll see what's going on. So Roku has 2 calls, NOG has 1, PBF, PEN, Dish, etc., etc. So right off here, MSTR, in the next 7 days, somebody's expecting it to go up 10%. It's already on a strong uptrend. Looks like they're seeing a continuation to the upside. People keep buying these Roku calls for $75. You have a big one for Roku over $137,000 in the next 35 days for hitting 75. I'm just kind of glancing through to see if there's any big movers down here. Right here, Dish. Somebody's expecting Dish to move nearly 20% in the next 30 days. They bought the $9 strike and bought $33,000 worth of contracts on that particular play right there. So, the beautiful thing is why is this important? Medium and small cap stocks tend to be more sensitive to option sweep data. What that means is there's not as many shares available for trading. That way, when you see a $30,000 contract go through, that's the equivalent of seeing a $100,000 or $200,000 option contract go through on a mega cap. And when you get into the small cap, you'll see even higher moves. So for example, IMGN, 10% move next 30 days. DWAC, 85% move next the next 56 days. Let's see. SYM, expect to make a 12% move next 120 days. ENVX, they're expecting it to make a 30% move in the next 182 days. So this shows you just where you can see bulls loading up, because it's not just one contract you want to look at, it's the quantity of contracts. Let's go to ENVX again. We have a lot of people right here, a lot of money getting thrown on a small cap stock, assuming that ENVX is going to go up nearly 30% in the next 182 days. So you can see it was on the uptrend lately, and it looks like it's continuing to the upside. Just look at the chart above. But we have a $26 strike and a lot of $25 strikes. So you can conservatively think, hey, a lot of people think that it's going to go up to $25. Let's look at aspects of this. 60,000, 30,000, another 50,000. So we got 150,000 roughly worth of option contracts for ENVX. So multiply that by 100. That is 1.5 million, or is that 15.2 million? Let me see real quick. Pull up the calculator for us, because I can't do simple math sometimes. So if we have 3200 plus 59500 plus 52500, that's 144,000. Now, let's multiply that value by 100, because it's the equivalent of buying 100 shares. So now that is nearly $15 million worth of buying power going in a bullish direction on ENVX, when ENVX, we know for a fact, is worth less than $2 billion. $15 million to the bull side on a small cap company tends to lead to exaggerated moves that mimic that transaction. So in this case, you can expect ENVX to make a strong move to that $25, $26 level within the next 182 days. Guys, I really hope you enjoyed this video. This was a simple breakdown on how you can read option data to determine if you're bullish or bearish on a stock. If you want to check out TradeUI for yourself, go ahead and click that link in the description below, and it'll take you to TradeUI's site, as well as show you all the other videos they have available that shows you all the other tools that you can use to give yourself a trading edge. Guys, I hope you have a great evening.